Hello, welcome to European Open Briefing for Tuesday, June the 26th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we still have quite a bit of risk-off sentiment this morning amid ongoing concerns about an all-out trade war. The dollar is struggling against the yen still. Stocks have fallen sharply following those reports that the US could ban Chinese or restrict Chinese investment into US technology firms. The trade war tensions have taken a hit, not just on Chinese stocks, but also on the yuan. The yuan has slipped to 6 months low this morning against the US dollar. In European currencies, they're not doing too badly. The euro did hit a 1.5 week high earlier today, and the pound we can see is flat this morning. The Aussie, the Kiwi, and the Loonie, all commodity-linked currencies, are still struggling against the dollar. We're also seeing some weakness in metal prices as well. We can see the Loonie is flat, but the Aussie and the Kiwi are extending their losses against the US currency. Gold, though, isn't benefiting at all from the risk-off. It's down on the day by 0.3%. If we take a look at the main moves this morning, oil prices are up, although they did fall sharply yesterday. The biggest loser against the dollar, though, is the Kiwi. And let's now take a closer look at the US currency. We can see dollar yen hovering just above those 2-week lows of 109.35. The dollar index is trading near 1.5 week lows. So apart from the yen seeing safe haven demand, we're also seeing safe haven demand for US Treasury notes, and that's pulling down on the yields, and that in fact is weighing on the US currency. We're seeing that those reports, that story about the US imposing restrictions on Chinese investment still attracting headlines. So Steven Mnuchin, the US Treasury Secretary, yesterday did say that those restrictions won't in fact just apply to China, but to all other countries as well. And that triggered a sharp sell-off in global equities. But then we had the White House trade advisor, Peter Navarro, contradicting that and saying that in fact there's no plans to impose investment restrictions on any countries, and now we're seeing some reversal of those losses. If we look at the Dow Jones, it did close above its highs, but it still ended the day below its 200-day moving average, and we saw the S&P 500 and the Nasdaq posting their biggest daily loss in 2 months. Stocks in China are also down sharply. They're trading near 1-year lows, but most Asian indices this morning did manage to recover from earlier deeper losses, and some even turned positive, and European indices are also starting the day in positive territory, but the main brunt is falling on technology stocks this time round. They had been immune to the big sell-off early in the year when we saw the Dow Jones plunging, if you recall, back in early February. But technology stocks are now coming under attack as they're being targeted by the White House in the trade row with China and with other countries. Let's now turn to gold prices, because we did just have a bearish crossover of the 50 and 200-day moving averages. Gold is currently trading near last week's 6 months low, $1,260 an ounce. So although we have had quite a bit of risk aversion in recent days, gold prices haven't seen much benefit from that, and precious metal is still being weighed by the prospect of higher US interest rates. It remains to be seen whether or not that's going to change anytime soon, because until that does change, gold is looking fairly bearish at the moment. And quick look at today's economic calendar. It's going to be fairly quiet. The main data coming up later will be the US Consumer Confidence Index for June, and we're also going to have a number of speakers from the Bank of England and the Fed. That's it from me. Thank you very much for watching, and have a great day.